How's it going, everyone? Today is January 15, 2021. This is Israel, your loan officer down here in Southern California. Okay, so as promised, I'm reporting back. Yesterday, I had mentioned that President-elect Biden was going to announce his new stimulus package right around 7 p.m. So I watched that for pretty much in its entirety and wanted to make this video as quickly and to the point as possible. So with that, let's jump right into it. Okay, so what we know so far is that it's a 1.9 trillion stimulus package, and it goes by the name of the American Rescue Plan. And here we go, $1,400 checks. If you have already received $600, you would be receiving an additional $1,400 per adult. Now, the second one is a $400 increase in unemployment checks. So if you are receiving unemployment currently, you're going to receive that plus $400 on top of that. Next one is $15 minimum wages. They want to increase the minimum wage to $15. And now that's great if you're earning $7, $8, $9 per hour, and all of a sudden you get bumped to $15. Now the question is this: great for the person that's receiving an increase, but I'm sure there's going to be a lot of managers and owners scratching their head saying, where am I going to come up with this extra money? Well, we all know, depending on the service or the product that they're selling you or providing you with, those services are going to increase in price. Okay, and next we have $3,000 refund per child. And on top of that, if that child is less than 6 years old, it jumps to $3,600. Next, $400 billion to combat the COVID-19. And then we have $130 billion for the reopening of schools. And lastly, we have $10,000. They want to be able to liquidate or pay off your student loan up to $10,000. And it goes on and on and on and on with expenses. Again, I just wanted to get to the ones that are going to be affecting most of us. And hopefully I was able to get right to the point. Now, how do you think the financial market reacted to this package being sort of in a limbo stage where it's a great list, but yet again, it's kind of moving really slow? Well, here are the results of that. Mortgage-backed securities. Every time the financial markets don't like what they see, they respond back. And it was a negative news for them that this package is currently sort of just lingering there. It's not moving fast enough. And so we had a 22 basis points closing. And obviously this had a reaction with the mortgage rates. And let's take a look at them. Okay, so as you can see, the rates from yesterday versus today, a couple of changes for all those people with a 700 plus FICO score. They saw a decrease on their rate to 2.625, and the people with the 660s, it went up just a bit. Again, this is for a conventional loan. It requires 20% down payment, and all these rates are fixed for 30 years. If you can take a look down here, these are the rates the competition is offering, and they're tied to a 740 FICO score. Now let's move on to one of the loans that tends to be probably the most widely used, and that is the FHA loan. Again, same thing, 30-year fixed. The only difference is that this requires a 3.5% down payment. All right, so if you look at the rates from yesterday versus today, across the table, all the rates went down. Look at this, 2.375. Now we're offering a 2.25. Something to keep in mind, check this out, 740 FICO score. If you have that score, these banks, will be offering you a 2.75 or a 2.625. Here with us, you are only required to have a 660 FICO score, and we can lock you in at a 2.5 interest rate. Okay, and to conclude this video, here are my 2 cents. From the looks of it, they're going to take a little bit of time to get this thing approved. I'll be shocked if next week they sign off on that and everybody's happy. A lot of things are going to be happening in the next couple of days. I really don't see this package getting approved anytime soon. Let's hope I'm wrong and they are able to approve this. Now, mind you, we're talking about $1.9 trillion. Somehow, somewhere, someone is going to have to pay for that loan eventually. And that's going to be in the form of taxes. So eventually, yes, it sounds great that we're going to be getting all these perks, $2,000 or $1,400, minimum wages jumping from 7, 8, or 9 to 15 all of a sudden, student loans being paid off. We're going to have to pay for that eventually. And so just keep that in mind. It's not going to be, and it's not free money. And okay, well, that was just my spiel. If you are thinking about refinancing or purchasing a home, Definitely, definitely take advantage of these low interest rates. I'm not trying to sound like I'm selling this product. Come on, refinance, purchase. It's like these rates are really low. I mean, these rates are historically low. How long are these interests going to last? Well, if you have been checking out my videos, or the Fed is predicting 2023 is when things might be changing. So we have 2 years, but as we know, time nowadays just fly. I mean, 2020 just flew by. Who's to say 2021 is not going to be the same? 2022 might also be another example of how fast things are going to move. Okay, thank you again for your time. May God bless this nation. May God bless you. And I will see you guys on the next video. Take care. Bye-bye.